Does Bitcoin's price sometimes feel like a roller coaster to you? What if I told you that was a feature and not a flaw? Hi, I'm Mark of the Bitcoin Tutor, and today we're going to talk about why Bitcoin's price, and in fact, most cryptos, are so volatile. So, one of the interesting things is this is a new asset class. And so because of that, a lot of people have not yet participated. And so it's considered speculative. So this means you're taking a chance because no one really has a long-term history on cryptos. In fact, Bitcoin is about 15 years old, and that's the oldest cryptocurrency. And the other cryptocurrencies you may have heard about, like Ethereum and Solana, they're all newer that have come out since Bitcoin, and many of them based on a lot of the Bitcoin principles. So it's very interesting right now because at 15 years, that sounds like a lot of time, but it's not for institutional investors. These are organizations that invest in something that's been around for 100 years or more. In this case of precious metals, thousands of years. So they're much more conservative investors. But what we're seeing now as of the last year and 2 years are financializations of crypto. You're seeing different trusts and funds and ETFs and whatnot happening in Wall Street to help people get into crypto without taking the full leap in actually owning crypto. Now, there's pros and cons to that, but that also helps to make it more volatile because people are investing from different places. They're investing directly and they're investing in some of these other derivative vehicles. So the other thing is, newcomers to Bitcoin, many of them have not really invested a lot in the past, and there's a lot of emotion. And in fact, there's basic rule in markets that those who are emotional land up losing their money to those who are patient and have a plan. And so that's a very important thing to remember. So especially with the volatility, if Bitcoin goes down 20% in a week, some people panic and they sell, and that affects the price. And that Bitcoin then goes to the what they call the strong hands, from the weak hands to the strong hands. The people who know this is a long-term investment. This isn't necessarily about making money in a week and retiring. This is longer term. This is usually to look at it as a multi-year investment. So let's talk about, again, why things are volatile. So Bitcoin has a limited supply, as you may have heard, 21 million Bitcoins, and currently almost 20 million Bitcoins have been mined. So there's only a little Bitcoin left ever to be created. So it'll end up being that the existing Bitcoins are the ones changing hands over and over again. So you can imagine that if there's more and more people who want Bitcoin, that over time, the price of Bitcoin may indeed go up. So, and there's also a 4-year halving cycle. What that means is that every 4 years, the number of new Bitcoins that get created gets cut in half. So if you have fewer things that people want and more people wanting those things, well, then the price goes up. Supply and demand. If the supply goes down and the demand is stable or growing, and we know it's growing, so the price will naturally tend to rise. A lot of this reminds me of the early days in tech stocks too. I was in the Silicon Valley for many years, an executive there as well. And what we saw during the internet boom, the .com boom as they called it, was that little companies that people had never heard of became huge monsters. These are companies that we know today as Google, Amazon, and others that went from unknown, obscure companies that were just small startups to huge multi-billion and even trillion-dollar companies such as Apple. So it's very, very interesting times. And what we can see is some analogy between what happened then and what's happening now. So the price does fluctuate like all markets based on market sentiments, things happening economically, and this includes also news. So when people hear that Tesla and MicroStrategy are buying a lot of Bitcoin, people ask themselves, well, what do they know that I don't know? And maybe I should follow the strong hands. Maybe I should follow those companies who know what they're doing and who are investing significantly in those assets and to follow them. After all, as individual investors, we're really small investors. Even if people invest millions of dollars, you're looking at these companies who are investing hundreds of millions or billions. So again, we're considered small investors, and many of us are just investing $100 or $1,000. So you can imagine we're not swaying the price. So if we can follow those large investors that are going to affect the price, then that can be to our benefit. Now, there are other market factors too. We've seen in the US especially regulatory attacks on crypto and different news recently as well, more positive news recently with the Trump election and with the pro-crypto legislators getting into Congress. So these are positive movements for crypto, but there were a lot of negative movements over the last few years with attacks by the SEC, the Securities and Exchange Commission, on multiple exchanges and Bitcoin companies and some Bitcoin projects as well. So that just muddied the waters and made it not seem as safe for investors to invest. So now, as there's more of a feeling of safety, people will be more and more willing to invest. For those to get into Bitcoin, there's always the question, and again, I get this question from clients and other interested students all the time. When should I invest? People want to buy low and sell high, and of course that's a great goal, but it's impossible. Even the best investors know that they won't get the lowest low or the highest high. So sometimes the easiest to do, if you just want to sort of set it and forget it, is to use what's called dollar cost averaging. And people do this with mutual funds, and they do this with a number of other investments on Wall Street. And it could be applied to Bitcoin and other cryptos as well. And what it entails is simply this: whether the price goes up or whether the price goes down, you invest the same amount on a regular schedule. For example, if you get paid twice a month, then twice a month you invest a certain amount, let's say $50 or $100 each time, into Bitcoin. Now, if the price goes up, okay. If the price goes down, well, great, you get more for your money. But over time, those prices average out, and you land up riding the wave, which has been up and to the right, higher and higher since the inception of Bitcoin. Yes, there's been dramatic adjustments, a dramatic volatility, up and down. But if you look at the trend over 15 years, Bitcoin has gone from pennies to now around, and right now approaching $100,000. So it's definitely moving in that positive direction. The other thing I would say is don't put all your eggs in one basket. Don't necessarily, and again, this is not financial advice, but in general practice, investing, putting everything that you own into one investment, mortgaging your house and all of this, is probably not the best way to go, okay? Certainly, it's important that you follow your own vision, your own plan. But in general, having some diversification is important, whether it's in and out of cryptos or it's among different cryptos. So you have some exposure to differences. The reason I bring this up is it's not unusual to see a crypto project, not Bitcoin, but certainly other crypto projects that are smaller not make it, just like many companies don't make it. And if so, then something you bought for maybe $1 goes to zero. And that we've seen that happen multiple times in cryptos. So be aware that there's no sure bet in cryptos. Bitcoin is as close as it gets to that, and then some of the other major cryptos beyond it as well. So I would say that really at this point, to close, that Bitcoin's volatility is really, it just reflects its growth potential, that there's a lot of people that are very excited about getting in and out, some people looking to take profits along the way, which then drops the price, and then more people coming in, which drives up the price. So over time, though, we are seeing still up and to the right, meaning prices higher and higher and higher. So thanks for watching. I encourage you to continue learning about Bitcoin. We have a lot of educational videos on this channel, the Bitcoin Tutor. And so I invite you to subscribe so you get the latest information. And also, we have resources on our website, thebitcointutor.com. So I invite you to take a look there. And I invite you to continue to track this amazing new discovery and creation of Bitcoin and cryptocurrencies. Go crypto.